A new level at 1.00785, but here's what stops it from running further. 80% of accounts are already holding the position. So there's no fresh money left to push higher.
That's a constraint most traders miss. Third, push back on the red. Open interest is actually falling while we're still climbing, which suggests existing longs are closing out rather than adding. Isn't that a more bearish signal than just saturation?
You're right that it complicates the picture, Ryan. But order flow is still 58% buy side, so we're not seeing a capitulation yet. The real test is whether we hold above 0.9993 in the next 45 minutes.
And if we don't clear that invalidation level, what does the tape tell us about whether this was genuine momentum or just thin liquidity bounce?
It tells us the run was over before it started. Equities are up on soft inflation data this morning, with the S&P and Nasdaq both climbing as traders pare back expectations for near-term rate hikes. That matters because it means the Fed's likely to hold steady, which is what markets have been pricing in for September.
The inflation picture is more mixed than the headline suggests, though. Yes, the latest print came in softer than expected, but there's stickier underlying momentum that the Fed will scrutinize before any pause becomes official policy.
Ryan, you're saying the one-line victory lap obscures real wage and service pressures that won't disappear overnight. So even with the September pause odds at 60%, the door doesn't slam shut on future moves.
Exactly. And cryptocurrency traders are treating it as a ceiling rather than a floor. Bitcoin's hovering near 63,500, but that's because the market's looking past the CPI relief to what the Fed signals next.
So the real test for equities and crypto alike isn't today's data, it's the central bank's next communication. That's where conviction either builds or cracks. Bitcoin and Ethereum are telling opposite stories in open interest right now. Bitcoin's losing contracts even as prices hold, which means this rally is getting squeezed tighter. Ethereum, though, that's different. New money is flowing in there, open interest up 0.5% on the day, and that suggests conviction behind the move.
But Ryan, doesn't that contradict what we're seeing in the broader crypto complex? Solana and XRP are both down nearly 0.8% in open interest. Are traders rotating out of those names entirely, or just hedging their bets?
I'd call it selective conviction, not rotation. The money's not leaving crypto, it's choosing its spots. Solana's down more than 0.5% in contracts, XRP the same. That's meaningful position reduction, not repositioning.
So what's the signal for the retail trader watching us right now? Should they read Ethereum's strength as a reason to nibble, or are we just seeing derivative traders playing catch up on the move that's already happened?
Catch up, probably. New open interest on a price that's already moved is late money. The squeeze in Bitcoin is the story, that's where the real tension is building. $635,000 print just crossed on Bitcoin, more than 20 times normal size. It hit moments ago and the book has already refilled behind it. Longs are paying across 8 of the 10 major cryptos right now. Avalanche is the most expensive, with longs transferring nearly 11% annually to hold their positions. Binance Coin flips that picture, shorts are collecting 13.5% annually there. That's the widest spread in the market today. The median funding rate sits just above 14 basis points, suggesting moderate long crowding, but concentrated in specific names rather than systemic. We've backtested this method on Bitcoin twice now, and Ryan, the numbers are not hiding. Intraday we took 36 trades and won 19% of them. Swing trading, 23 trades, 11% win rate. Both strategies bled expectancy. So why are we running it live right now?
Because Natalie, the ratio works even when the hit rate doesn't. You're risking 0.3% to make 0.7% intraday. That 1 to 2.3 payoff ratio means you can lose consistently and still break even over time. But I'd ask, when have you seen this actually work in the real market, not the backtest?
That's the problem. It hasn't. The backtests show what the math should do. Real trading shows what actually happens when you're in it. Open interest is falling on both setups, which means positions are closing, not opening. That's friction the historical data never saw.
So we're essentially live testing a theory that failed its own exam.
Exactly. And the moment it closes through our stops, we kill it and say so. Dogecoin's down nearly 1.5%, the worst performer in the major set right now. That's nearly 2 cents off from yesterday. Ryan, we're seeing some real rotation away from the meme names today.
We are, but Avalanche is posting almost a full % gain while most things bleed. That's unusual momentum for an alt when Bitcoin's barely moving. What's driving that specific strength?
Good question. Avalanche broke higher yesterday on developer activity. The volume's there to support it. But here's what matters for your portfolio. When you see that kind of divergence, the market's telling you it's picking winners, not just pushing everything up together.
So the weakness in Dogecoin and Polkadot down nearly 2%, that's not contagion. That's selection.
Exactly. It's discernment, not panic. $278,000 print just hit Bitcoin at $63,456. That's 53 times the typical trade size. It was a seller and it did not get absorbed, still sitting on the books. Solana's the outlier this morning, realized volatility at 36% against Bitcoin's 21. That's a 15-point spread. The range Solana's trading tells us it could swing another 1.4% either way in the next few hours.
But Ryan, those are historical moves. What's driving the gap between realized and what the market's actually pricing in for implied volatility on Solana versus Bitcoin?
That's the question, isn't it? Solana's implying tighter moves than it's actually delivering. Ethereum similar story at 26% realized. Bitcoin alone looks anchored.
So traders are underpricing Solana's actual swings?
Exactly. That's where the friction is. Bitcoin's sitting at 63,421, but it's trading below the 200 moving average at 63,752. The 21's at 63,628. RSI is soft at 40, so momentum hasn't rolled over yet, but price action says the sellers are in charge. Support stacking at 63,395 down to 63,330. The real question is whether we hold above that first level.
The moving averages are compressed though, Natalie. 9, 21, 50 all sitting within 40 points of each other. When you see that kind of stacking, aren't we more vulnerable to a sharp move than we first appear? How much breathing room does Bitcoin actually have before it tests that 63,330 support?
Ryan, that compression's exactly the problem. It means there's no cushion. But look at Ethereum and Solana, same pattern, same soft RSI around 41. Ethereum's at 1879, 200 at 1887, and Solana's barely above support at 7568. This isn't isolated volatility. It's market-wide consolidation before a directional break.
Fair point. But XRP's RSI is even weaker at 39, and its trend strength is -5 versus Bitcoin's -3. Doesn't that suggest XRP's closer to capitulation than the others?
It does. XRP's the canary. If it bounces off 1.0026 support, we might see some stabilization across the board. If it breaks, the rest will follow faster than you'd think. We have two Bitcoin trades in front of us this morning, Ryan. The intraday short sits at 63,436 with a stop at 63,627 and target of 62,998. The swing version uses the same entry but a wider stop at 64,332, targeting 61,376. Both offer a 2.3 to 1 risk reward. The tape says the trend is down, price is capped by the 21-period average, and order flow is running 20% to the sell side.
So the intraday play risks 0.3% of capital for 0.7% of reward, while the swing trade is asking for 1.4% risk to capture 3.2%. That's a meaningful difference in patience required. But Natalie, what concerns me is the open interest falling. Does that signal conviction, or are we just watching positions close into weakness?
That's the real question, Ryan. Falling open interest on a downtrend usually means longs capitulating rather than fresh shorts building. So we've got weak hands exiting, which tends to be sharp but not necessarily sustained. The intraday trade respects that with tighter stops. If Bitcoin closes through 63,627, the setup fails.
And the swing trade flips at 64,332. So we're bracketed. How long do we give the intraday before we know it's not working?
Intraday means hours. If it doesn't move in that window, we're done. The market will tell us at the level. That's where it stops being true. Bitcoin just absorbed a $6.3 million buy print at 63,300. That's 99 times the median trade size. It hit 4 seconds ago. The move came as sellers overwhelmed buyers by nearly $15 million in the session, pushing Bitcoin down 16%. Positioning story this morning is getting dangerous. Ethereum, Solana, and XRP are all heavily skewed toward longs, 70% or higher, while Bitcoin sits more balanced at 59% long. That's a meaningful gap, Ryan, and it matters for what happens next.
It does, but I'd push back on the danger framing. XRP is the most extreme at nearly 80% long, yet it's held its ground. Doesn't that suggest conviction rather than crowding?
Fair point, but conviction and crowding aren't mutually exclusive. When you've got that many people on one side, the exit becomes the trade.
True, though Bitcoin's more neutral positioning might be the real vulnerability here. Why hasn't it drawn the same conviction bias that Ethereum and Solana have?
That's the question for the next 4 hours. If those alts unwind first, Bitcoin could follow. Watch the exits, not the entries. Bitcoin and Ethereum are both shedding open interest this morning, down 0.1% each, while prices hold steady. That's a squeeze pattern, traders closing positions rather than adding to them. The real story is Solana, Ryan, which dropped nearly 0.7% on open interest. That's meaningful profit taking.
It is, but I'd push back on the characterization. Solana's down 0.7 on RI while still holding above $490. Compare that to Dogecoin, which shed almost nothing on open interest, barely 0.1%, yet it's trading higher. Isn't that the fresher money flowing in?
Fair point. Polkadot's the real story this morning, down more than 2% while most of the market's barely budging. That's your biggest mover in the major names, Ryan.
Fair point, but Dogecoin's dropped 1.4% on nearly $1.3 billion in volume. Is that liquidity fleeing, or are we looking at profit taking after that recent run?
Profit taking, I'd say. Volume that high on a move that small usually means the selling's broad and shallow, not panicked.
Polkadot though, Natalie, it's broken below 80 cents. What's the technical story there that worries you?
It held support at the low. Until that breaks, this is consolidation, not collapse. Watch the next 4-hour close. Equities are higher on softer inflation data and solid earnings, while the S&P and Nasdaq both gained ground today. The real story here is what this means for Fed rate cuts. Softer inflation takes pressure off the central bank to stay aggressive.
Ryan, but the Dow actually dipped even as the other two indexes climbed. That divergence tells me investors are being selective about where they're putting money, not uniformly confident.
That's a fair read. What are you seeing in terms of sector rotation behind that split?
The earnings beat narrative only carries so far when you've got macro uncertainty hanging over large cap industrials. Investors want growth right now, not cyclicals.
So tech and discretionary outperform while traditional blue chips lag. That tracks with the inflation relief story. Lower rates favor long-duration assets. Moves like these tend to hold if the Fed actually does pause in September. $238,000 Bitcoin buy just hit the tape at 63,380, absorbing nearly 32 times the median trade size. That print landed 46 seconds ago. Bitcoin's dominance just hit 56%, and that's where the real rotation story is. Ethereum's been cut to 10% of the total market cap. Everything else, altcoins, smaller tokens, that's down to a third. The majors are consolidating capital right now.
But Natalie, the total market cap itself is barely moving. We're down a fraction of a percent in 24 hours. Isn't that suggesting money's rotating between these big players rather than coming in fresh from outside?
That's exactly it, Ryan. This isn't a growth story. It's concentration. Money's leaving the edges and moving into the fortress positions.
So for the viewer watching their portfolio, what does that mean for altcoin positions they might be holding?
It means the window for diversification has probably closed. You're either in the majors now or you're waiting on the sidelines. Cardano's the outlier in crypto funding today. Longs are paying shorts 11% annualized on ADA, the highest clip we're seeing across the board. That kind of rate means the market's genuinely crowded on the bullish side.
But Ryan, you've got Binance going the other way entirely. BNB shorts are collecting from longs at 5.5% annualized, which suggests there's real disagreement about where that one's headed next.
That's the tension worth watching. Most of this space is long biased and paying for it, but BNB tells you not everyone's convinced on the alt season narrative.
So what does it mean for positioning over the next few hours before the next funding reset?
Anyone holding size on the crowded trades is taking on significant carry cost. That pressure tends to flush out marginal longs when volatility spikes. XRP is running higher this morning with order flow heavily skewed to the buy side at 58%, but here's what breaks the pattern. Open interest is falling, which means positions are closing out rather than new money piling in. That caps the upside significantly.
So we're seeing profit-taking masked as momentum. But 80% of accounts are already long according to your data, which means there's barely any fresh buyers left to chase this higher. How long do you think this tape holds?
Ryan, 22 minutes left on the window and it needs to hold above 9993 to stay valid. The real pressure here is that the buy orders are coming from existing longs, not new conviction.
Meanwhile, Polkadot's doing the opposite, 86% sell-side order flow taking it down towards 760255. That's the tape that actually reflects fresh selling pressure, not position unwinding.
Exactly. One's closing winners, the other's capitulation. That's the setup your viewer needs to understand about crypto this morning. $4.4 million Bitcoin sell just crossed at 63,210. The print was 30 times the median trade size and went unabsorbed into the market about a minute ago. Bitcoin's order flow has swung sharply negative. Sellers have dominated the last hour with nearly $21 million hitting the tape versus $9 million on the buy side. That's a delta of almost $12 million to the downside, and it matters because the largest single print we've seen is a massive $1.1 million sell at 63,000. Ryan, the question is whether that absorbed or if we're seeing real distribution here.
The print did get absorbed, Natalie, but what's interesting is the velocity. We've had 6,000 individual trades, yet that single sell represents nearly 90 times the median trade size. That's not normal. When you see that kind of outlier absorption alongside a negative cumulative volume delta approaching 87 million, are we looking at the start of a real unwind or just price discovery?
Discovery, I think. The price itself has barely moved, up less than 5 basis points to 63,046. If sellers were truly in control, we'd see more damage. What we're actually watching is institutional players testing the level.
Fair point, though the second and third largest prints were also sells at 63,000. That's 3 massive prints all at the same price. Isn't that almost too convenient? Feels like someone's building a position against the bid rather than panicking out.
You're right. That clustering tells us they're patient. They know where the buyers are and they're working size methodically. For viewers watching this, Bitcoin is stable, but the underlying order book is being reshaped. Bitcoin's selling pressure just deepened. We're seeing more than $105 million of cumulative sell volume, and that's driven the delta down nearly 60%. But here's what's striking: Ethereum's only half as negative at 37%. That gap is widening.
The Ethereum trades are smaller though, Natalie. Average ticket is under $10,000 versus Bitcoin's almost 10,000. Isn't that a sign of retail participation rather than institutional conviction on the buy side?
Fair point, Ryan, but volume still matters more than ticket size here. Ethereum's absorbing selling pressure better than Bitcoin. That suggests different money is at work between the two.
So you're saying the alts are rotating away from Bitcoin weakness rather than following it down?
Exactly. When Bitcoin dominance cracks like this, we should see everything collapse together. We're not seeing that. That's the divergence worth watching. Polkadot's down nearly 3% this morning, the weakest performer across the major names. Everything else is holding relatively steady, but that's worth watching if it signals broader weakness in the layer 1 space.
Natalie, Dogecoin's actually close behind that down 1.8%, though. Does that suggest retail is rotating out faster than institutions, or are we reading too much into a single day's moves?
Hard to say it's a retail story when the volume's there across the board. Ethereum's down 1.5% on $3.2 billion in turnover. That's institutional weight, Ryan.
True, but the smaller names are moving more sharply. Polkadot's volume is thin by comparison. Isn't that what usually precedes a bigger shift?
It could. Watch for whether Polkadot holds above 76 cents through the afternoon. That's your signal. Bitcoin hit target on the short this morning in 28 minutes, 1 to 2.3 risk reward, and it closed the trade. The tape is supporting lower prices. We have a new swing set up short from 63,436 with a stop at 64,332. That level matters because it's where the 200-day average sits. If Bitcoin closes through there, the downtrend argument breaks.
That's a quick win, but I want to push back on the bigger picture here, Natalie. Your backtest on Bitcoin swing trades over the last few months shows an 11% loss across 23 trades. The hit rate was barely 11%. How much confidence do you have in this new entry when the same time frame and instrument has been this unforgiving?
Fair question. One trade doesn't validate a strategy, but this setup has a different trigger. Order flow is 20% sell side and price is capped by the 21-period average. The backtest was noisier. What matters now is whether this hold. Ryan, if it doesn't, we close it.
Understood. So watch 64,332. What about Ethereum? You have both an intraday and a swing short running. Aren't you doubling down on the same directional bet in overlapping time frames?
They are different entries and different targets. The intraday runs into 1,861 in hours. The swing targets 1,795 in days. But you're right to flag it. If the intraday closes the stop at 1,884.6, I'd reassess the swing before adding to the same side. Bitcoin's trading below its 21-day moving average at 63,549, and that's the problem. Price at 62,844 means we're testing support on every dip. The 200-day sits at 63,742. RSI is deeply oversold at 27, which normally signals a bounce, but the trend strength is -3 across the board.
Natalie, I'm watching Ethereum more closely because it's different. Yes, the RSI is soft at 30, but look, support at 1858.76 is still holding. Bitcoin's already below its 200. Why aren't we seeing the same capitulation in Ethereum yet?
Because Ethereum hasn't broken below its 200-day at 1887. Ryan, that's the line. Once it cracks, we're in genuine downtrend territory. Bitcoin crossed that threshold, and it's why the selling feels heavier there.
Fair point, but Solana and BNB are also below their 200s, and their RSIs are softer, around 30. Why is Bitcoin the canary here and not the rest?
Because Bitcoin sets the tone. These 5 assets all have negative trend strength, but Bitcoin's RSI at 27 is oversold while the others are just soft. That RSI divergence matters. Bitcoin's at an extreme most traders won't ignore, and that's where the bounce setup sits. Dogecoin's the biggest mover this morning, down 1.3% in the last 24 hours. That's weakness across most of the crypto space, but Dogecoin's taking the hardest hit.
The question is whether that's just profit-taking or something more structural. Avalanche is actually up nearly 1%, so it's not a wholesale flight to safety. What's specific about Dogecoin right now?
Ryan, the volume tells you something. Dogecoin's seeing 1.3 billion in volume, which is enormous. That much activity on the downside usually means conviction, not just casual selling.
Fair point. But Ethereum's down less than 1% despite 3 times the turnover. Doesn't that suggest Dogecoin holders are just less patient than the broader market?
Could be. Either way, if Dogecoin breaks below 7 cents, you're looking at real support failure. That's where the move gets interesting for traders. We've got 2 setups working right now. Polkadot's short is still live with 27 minutes on the clock. Order flow is 86% sellers, so the tape is doing exactly what we need until it breaks above 0.773. Bitcoin's the contrarian play here, Ryan. We're calling it higher even though the broader crypto market is rolling over, because open interest just jumped 1.1%. Which tells us this is fresh money coming in, not short covering.
But that's the tension, isn't it? Bitcoin's target is 63,436. Only 400 points of room to work with. What happens if we lose that invalidation level at 62,761 before we get there?
We close it. That's why it's an invalidation level. The point is the order flow split is nearly even at 49% buy, which in this market right now means conviction. Polkadot's the higher conviction trade because the selling is overwhelming.
Fair, but we missed on XRP yesterday, down 0.42% in 25 minutes. How much of a buffer are we building in before the next call?
We're not chasing. We're watching the setup. That's the discipline. Equities are climbing on softer inflation readings, with the S&P and Nasdaq both pushing higher. That matters because it's shifted the entire conversation around Fed rate cuts. Traders are now pricing in a September pause at roughly 60% odds instead of expecting another hike.
Ryan here, and I want to push back on how much of this rally is really inflation relief versus earnings surprises. Because the flows into mega cap tech have been enormous regardless of what the CPI says. Are we seeing broad-based buying or just the usual suspects getting bid up again?
Fair point, Ryan. The Dow actually dipped while those two outperformed, which tells you exactly what you're saying. But here's what matters for your portfolio. If the Fed does pause in September, that's a structural shift away from rate shock, and that changes everything for dividend payers and bonds.
Bitcoin's still hovering around 63,500, though traders are looking past the CPI data to what the Fed actually does next. Doesn't that suggest markets aren't fully convinced the inflation story is over?
No disagreement there. Crypto's holding steady rather than rallying on the news, which is telling you the real test comes when Powell speaks. Until then, this is a relief bounce, not a conviction move. Bitcoin's getting hammered on the sell side this morning. Sellers are moving nearly $9 billion more than buyers, and that's flipped the entire narrative for the altcoin complex. Ethereum though is moving the opposite direction. Buyers are actually ahead by 483 million.
That's the real divergence here, Natalie. Bitcoin's cumulative volume delta is deeply negative at 38 billion underwater, but Ethereum's fighting back with positive flow. Does that tell us the smart money is rotating out of Bitcoin into Ethereum specifically, or just hedging downside?
It's more nuanced than a straight rotation. Solana, Ripple, Binance Coin, they're all following Bitcoin lower. Only Ethereum is bucking it. That suggests selective strength, not broad alt-season rotation.
So the market's differentiating between quality and everything else right now.
Exactly. When Bitcoin dominates flows like this but one major alt resists, that's your edge. Bitcoin closed through its entry this morning and hit target in 28 minutes, 1 to 2.3 on the risk reward. That trade is done. We have two setups still live. Ethereum intraday is the shorter term play, entry at 1877.6, stop at 1884.6, target 1861.3. The trend is down, price is capped by the 21 period average, and order flow is 20% sell side. If it closes through the stop, the idea is wrong.
Natalie, the intraday does work, but I want to flag the swing Ethereum trade below it. That one has nearly 2% of risk for 4.5% of reward. Doesn't that give you more room before you have to call it, or does the shorter time frame matter more to you right now?
The intraday closes in less than 8 hours. The swing is days out. Ryan, open interest is building on both of them, which means new money coming in, not shorts covering. That supports the downside on shorter time frames when momentum can still turn fast.
Fair point on the momentum. But Bitcoin's backtest on intraday shorts shows only 19% hit rate over 36 trades. How much are you weighing that against this morning's win?
One trade doesn't remake the math. The setup works when it works. We'll know in hours if Ethereum intraday holds the line at 1884.6. Solana's where the real action is today. 36% realized volatility against just over 1.5% intraday range. That's a massive disconnect, Ryan. The market's pricing in bigger moves than what we're actually seeing.
But Bitcoin's sitting calmer at 22% realized, which suggests traders are hedging crypto risk differently across these assets. Are we seeing money rotate out of the wilder names into Bitcoin's relative safety?
That's possible, though Ethereum and XRP are both trading above 26% realized with tighter ranges too. It's not just a flight to Bitcoin, it looks more like the market's bracing for a bigger move that hasn't arrived yet.
So you're saying the next few hours could see that implied volatility finally catch up to realized?
Exactly. When realized outpaces range this much, something's got to give. Polkadot's down 2.3% in the last day, making it the biggest loser in our crypto basket this morning. That's a sharper drop than we saw with Bitcoin, which is off 0.6%.
But Natalie, look at the turnover on Bitcoin, over $3.3 billion in the last 24 hours. Polkadot's only done 7.9 million. Are we overstating the move just because of the percentage?
Fair point, Ryan. The raw volume tells a different story. But for retail viewers watching their holdings, that 2.3% hit stings more than the liquidity picture suggests.
What about Avalanche? That's up 0.7% while everything else is bleeding. What's driving that outperformance?
Avalanche is bucking the trend, but the volume there is modest compared to the major players. It's a bright spot in a red day, but don't confuse volume with conviction just yet. Bitcoin's up 0.1% on the day, but open interest just grew. That's new money coming in, not a squeeze. Ethereum's doing the same thing, up 3.5% with open interest climbing another 3.25%. That's textbook accumulation into strength.
But Ryan, look at the contract numbers. Ethereum's only got 734,000 contracts open compared to Bitcoin's 58,000. How much real conviction is that actually representing in the market?
Fair point, the ratio matters. But here's what concerns me more. Dogecoin and XRP are both down despite holding their positions. That's distribution without price follow-through, which usually precedes a move lower.
So you're saying the weakness in those alts could be telling us something about risk appetite across the board right now?
Exactly. When your smaller positions are selling into strength, it suggests traders are rotating to safety. Watch Bitcoin hold above 59,000. From all of us on Midday Market Brief, thank you for watching. Moneymakers is next, with Peter Panderson.
Thank you, Natalie Anderson, and welcome to Moneymakers. I am Peter Panderson, fund options editor, alongside Victor Bennett. Investing in ETFs for the next hour. Bitcoin's down 0.5% at 63,000 and change. Ethereum off almost 1%, but the real tell is inside the crypto complex. Dogecoin's cracking down 1.5%, Polkadot down 2.3%, and that's your signal. The bid is pulling out of the smaller caps first. Peter, you're reading that as weakness spreading down the stack, but Bitcoin's still holding above 62.8. Isn't the real question whether we're rotating into quality here rather than rotating out altogether? We'd see that in Solana if it were true. It's barely moving, down 0.1%. That's not conviction. Avalanche is the only thing with real lift. up 0.7%. Thin volume tells you something too, Victor. Dogecoin's moving over $1 billion in 24-hour turnover, but the price action doesn't stick. Are we watching weakness or are we watching noise? When volume that heavy produces moves this flat, that's distributive. The money's coming out. Bitcoin at 63,059. The 21-day moving average sits at 63,514. The 200 at 63,737. Prices below both. RSI is 33.7, soft oversold. Resistance stacks at 63,633.